What's up guys, Raymond here with another financial statement analysis video. This is going to be episode 15 in our German industrial stock analysis videos, and without further ado, we're going to start off with the key ratios. If you're new to my financial statement analysis videos, what we do in these videos are we analyze the top 3 financial statements relevant to a company, those being the income statement, balance sheet, and the cash flow statement. We look at the key factors of each statement and we try to analyze and come up with an idea of how well the company has done up to the present day and how well it will do in the future. So let's start off with the key ratios. The market cap is 533 million euros, which is really good. But it would be preferable if the company's market cap, which is the overall price, was about at least €1 billion, just so it can reach a certain landmark or certain point whereby it's part of a larger group of stocks that have reached a certain level of attractiveness to the public market. This usually takes a lot of time or relevant to the particular company. Some companies manage to get to that landmark a lot faster than others, but that's just an idea to put out there. The revenue figure is about 400% of the market cap, which is the overall price. Well, of course, we're going to check the income statement to see how well the profit is. For example, because revenue is just a sales figure, it doesn't necessarily determine how well the company's done with regards to profit. The dividend yield doesn't show. The PE ratio is the price to earnings ratio, which shows the price of the stock, which in this case is 1.75 euros, as a ratio to the earnings per share, which is 1.57 euros to 0.16. And the beta level is the risk level, based on the volatility of the stock, which has been about 1.69 up to the present day, which is about 69% of the market average, above the market average. Sorry, that's not necessarily an attractive figure to prospective shareholders, but it's not necessarily the worst thing in the world. So we're going to get into the first of the financial statements, which is the income statement. So as you can see, the company's done well with regards to reporting its annual statements. It's done so for the past 4 years. Not many companies actually are on time with regards to reporting their financial statements, which shows that the company is definitely timely in the way that they're reporting their financial activities, which is very, very good. This is definitely an attractive point to prospective shareholders, as well as existing shareholders, because then they can make the decisions a lot earlier than earlier than anticipated, but also they can make the decisions on time and project future financial activity and make future financial plans a lot earlier than for those companies that don't release their financial information on time or early. So the 2019 financial year was a slight profit, not too much. 2020 was a negative profit by quite a substantial amount. The 2021 financial year was a slight negative profit, and 2022 was a slight positive profit. So let's just imagine a world where this company was doing well and the company's profit was quite consistent. Even if it was consistent, even if the profit margins were to be consistent, the profit margins will be extremely low. This is like a less than 1% profit margin type company. So I'm not too sure what type of company base this is. Of course, it's German industrials, but I'm not too sure exactly which what products they sell, but the profit margins are incredibly tiny. So I definitely don't think that would be, because the profit margin is, well, net income is the most attractive perspective to shareholders. It's the most attractive factor when considering a stock to invest in to prospective shareholders. So I definitely don't think that that's a positive trait about this company. So let's get into the balance sheet to see how the company does with debt. So just another bad thing on top of another bad thing. So it doesn't make much profit, but it also is like extremely highly leveraged. Like the dark purple figures reflects the liabilities, which is what the company owes to outside parties. And as you can see, over the past 4 years, it's just been close to its assets with regards to the leverage. It has almost as much as liabilities as it does assets. There's very little difference. So that's not going to be good, because the interest payments on these assets will either accumulate if the company defers its interest payments, or if they do pay the interest payments, they won't have a lot of cash to do so because they don't make much net income. We're gonna check the cash flow statement to see how well the company does with regards to earnings per share, earnings before taxes, depreciation, etc. To see if there's any way to salvage the company to prospective shareholders. So let's get into the net income. The starting line, 33 million euros for 2022, 2021 negative 42, and 2020 was negative 343, and 2019 was 20 million. So overall, if you factor in all 4 years and you divide it up by 4, it's about, I would say, negative, it's over a negative 100 million, no sorry, negative, around negative 60 to 80 million euros consistently over the past 4 years, which is just not very good at all. So we're going to get into the cash flow from operating activities. 51.22 million euros, 36.6 million euros from cash from investment activities, 55 million euros of which was spent on capital expenditures. So that's not very well. It's actually quite good considering the size of the company. It's not the company is not very large at all. So it's about 10% expansion. The cash flow from financing activities was 152 million euros spent, which pretty much all of which was spent on eliminating debt. I think the company that has done a good job there, but I think they could do a lot more. But you have to consider the company, that's about half of the company's market value. So but then again, it's not what the company has on its books. So the company is that there's a large disparity between the company's overall price and the company's total equity. Net change in cash is 58 million euros negative, which is of course not good, considering that the company is not doing very well in any event, in any of the financial activities that he's doing. Well, in most of them anyway. 2021 negative 168, 2020 157 million euros positive, 2019 13 million euros. So it's doing well, and it done well in the past. It done well in 2019 and 2020. 2021 and 2022 were not very good at all. But we're gonna close the video. I hope you guys have enjoyed my analysis of this video. Hopefully I can be better and progress and develop as I learn more about financial statements and financial activities of relevant to a company. And I hope to see you in the next one. Peace.